Alrighty, folks. Welcome to Trading Made Simple. My name is Mike Conlon. I work for an outfit called FXEDU. We do forex trading education. Taking a look at Euro USD here. It looks like Euro's busting up just a little bit higher. 50.6 it looks like is ISM. So we can see that that's better than the expectation of 48.5. It's down a little bit from last month's reading of 50.9. Okay, but I think that's something that we're starting to see now in the markets is that we've been setting the bar pretty low for these numbers. So it's kind of like everybody looks like an Olympic hurdler when the bar is set pretty low. So that's kind of what we're looking at here. And you can see Euro's moving higher. It's unfortunate I didn't get you a second earlier, but I was looking at the scalping program I've got here, and this doji popped up, which would have been a nice little buy there for us on the scalp program ahead of this number. But we can keep an eye on this, and let's see if maybe perhaps we get a little bit of a pullback, which perhaps we can fade. But this is a pretty good number here today in light of everything that we've seen in the U.S. And it's the kind of thing where the numbers have been so bad lately that any ray of hope is going to be taken by the markets as a good thing. And we've kind of been seeing this a little bit of a pattern emerge here. Right now we've got markets that have sort of been focused on what's been going on in Europe, and the pattern's sort of been okay, overnight we get some selling in Europe, we get some risk aversion. Everyone's talking about, and we'll go over this in a little bit, but everyone's talking about all the problems they're having there with the debt crisis and Germany and the EFSF, not to mention declining economic figures being posted in Europe. All right, and then what happens is that we come into the U.S. session, and all of a sudden everybody says, hey, you know what, this isn't that bad. So, we can, move ahead with the markets, and usually we've been seeing some stock buying and some gains and things like that, and some of it has to do with, Bernanke and the Fed and the expectation of, perhaps QE3. So, these are some of the things that we've been watching and keeping an eye on. So, for those of you who haven't been on my webinars before, I'm just going to tell you what we're looking at here. We've got a 1-minute chart of Euro USD. All right, we've got a 3 standard deviation Bollinger Band setup. That's a 1 standard deviation, 2 standard deviation, 3 standard deviation setup, and we also are looking at a Heikin-Ashi chart. And the idea is that we're looking for changes in the Heikin-Ashi that occur around different Bollinger Bands, and then we're looking for them to move towards the outside bands where we can perhaps scalp them. Now, this is a short-term scalping program, and it's not to say that I want to encourage people to scalp or do anything like that. Obviously, you can trade the way that you want to trade, but based on the time window that we have here, sometimes it's really all we can do if positions have already taken place, or if it's at a point where perhaps there's too great a risk to get into certain trades. And that's kind of what I look at when I'm looking at different trades, is that I'm looking to take these low risk opportunities. And by low risk, I mean opportunities where I can get in either buying ahead of support, selling ahead of resistance, all right, and in a place where it's low enough that I can get in with a fairly low pip value and give myself an opportunity for a positive expectancy trade of at least 2 to 1 on a reward to risk ratio. So that's kind of what I look at. So the question is, what's the advantage of scalping for a few pips only? Well, there really isn't an advantage, Philip. I mean, it just depends on your style of trading, and it's the kind of thing where we can look, and let's go back and check out the 5-minute chart here. All right, and when you look at this chart right here, there really wasn't a whole heck of a lot going on this morning, and we were sort of sitting smack dab in the middle of this range. And we knew that 10 a.m. This ISM number was coming out, so we might be a situation where, well, is it going to go higher, or is it going to go lower? Well, I'm not exactly sure, because we're really into the middle of that range. And had we been closer to the top of the range, perhaps I'd be willing to say short it, because I'm going to get a lower risk opportunity there. But maybe if we're closer to the bottom of the range, I'd be inclined to buy it. But when you get into the middle of these ranges, sometimes it's like a coin flip. And, the idea is that you want to sort of stack the odds in your favor when you're taking these trades. So it's not necessarily that, you just want to scalp for a few pips only, always, but it's the kind of thing where, a lot of times you're just sitting around, you get your, you're sitting on your hands waiting for something to emerge, and it doesn't happen. But yet, sometimes you get these movements that occur that, you can take advantage of. And again, I'm not trying to encourage people to scalp, especially if that's, outside of what it is you're looking to do. But there can be times when, you can profit from these moves. So it looks like Euro is pulling back here. Okay, and the doji setup on the Heiken Ashi wasn't so hot on that one, but you could see that we hit the extreme band here at the third standard deviation. So the idea is that, you just want to place your stop just a little bit above where the previous high of the bar is, or I guess you could call them candles, but you just want to make sure that you understand the difference between Heiken Ashi, that these long wicks here don't necessarily indicate resistance like they would with candlestick charts, but rather you want to see these wicks occurring. Okay, if you look down on this down move here. So, the idea is that you want to fade the outside of these bands, all right, when you get the change, put the stop up just above, 5 pips or so, and you're looking for about 10 to 15 pips of upside. So that's kind of how this scalping deal works. So is this like flow trading? Not exactly. Flow trading, it depends who you are, but it's kind of like momentum trading, I guess you would call it. But the idea is that, you're trading back and forth between these micro ranges. So it's not like a breakout trade or a breakdown trade or something like that. So I don't necessarily know that I would call it flow trading. So anyway, so Euro, so that's what's happening there. And you can see on the 5 minute, that was a nice big, move there. But the range is still pretty narrow. If I'm looking at the Bollinger Bands here, just on a regular 2 standard deviation. All right, and we're about 25 pips in the range. So that's kind of like why I would look at scalping in an instance like this, because Euro has been fairly range bound as of late, and we can go back and we can look at the range on a longer term basis. If we look at, say, the 4-hour chart. All right, you can see this choppy action here. Just over 145.5 seems to have been the top. All right, and then back down here to say 141, a little bit below is the bottom. So right now we're sort of coming back, and it looks like we're starting to pull back towards the bottom of the range. Trading towards the top of the range, now we're moving towards the bottom. Well, what do we have going on in the markets? Well, we know about what's going on with the euro. We saw declining PMI figures in the top 3 economies in the Eurozone, namely Germany, France, and Italy this morning. And then we also have this, this EFSF deal going on where, the agreement was made by Merkel and Sarkozy back on July 21st, in principle. And they said, okay, this is what we're going to go with, but now we have to take it back to our people, make sure everybody's on board. And, frankly, Germany's having, a lot of trouble with political backlash trying to get this thing pushed through. And, there's been, a lot of debate over whether or not this is going to happen. And I believe that it's next Thursday or maybe Wednesday on the 7th, I think it is, that one of the German courts are going to come out and rule whether or not participating in this is constitutional. So that could throw an entire monkey wrench in the whole program, because they're supposed to vote, Eurozone leaders are supposed to vote on this program at the end of the month, and then that's going to free up the funds for Greece to get the additional bailout. All right, and then they're going to, hopefully be able to stabilize what's going on in the Eurozone. But we know the bond yields have been moving higher. We know that there's a lot of risk. So, it's very questionable as to what's happening. To be honest with you, I was a little bit surprised that Euro was trading the top of that range based on everything that's kind of happening. Well, if you look at the range it's trading at, what's it trading against? Well, it's trading against USD. And we know about the story here with USD. All right, we got the Fed minutes the other day, Bernanke's speech in Jackson Hole the previous week. And it looks like these guys may not be done with quantitative easing here. Regardless of what you think about the monetary policy, all right, these guys are really trying to stick to this dual mandate of trying to encourage employment and then keep prices stable. Well, a lot of people are saying we may be in a deflationary environment as the global economy slows in general. I don't know if anybody noticed this one, but Brazil actually just lowered interest rates by 50 basis points. Now, granted, that's still a very high interest rate there. I think it's around 12%. All right, but the idea is that, they're not afraid of the inflation right now. Everyone's worried about the pullback that's going to occur. So if we do get some deflation, then, we may see some more money printing, whether it's here in the U.S. All right, they're talking about maybe at the B of E. All right, we've got the pound. And let's take a quick peek at the pound here. All right, pound is lower. We're on the 4-hour chart again, and we're gonna looks like we're retesting these lows down here. We're trading a 161 handle, and in the let's go back a little bit further to the daily chart and just take a look. Okay, you can see on the daily, right down around this 160 psychological level is support. So we could see the pound pull back into that area. All right. And, there could be some speculation that perhaps the Bank of England is willing to embark on some further easing, whether it's, bond purchases, what have you. I don't think they're ready to move on interest rates just yet, but, the economic data is slowing in the UK as well. Again, PMI. And we've seen PMI coming down just about everywhere. I think China actually had PMI. It was up a little bit from last time, which was all the way down, but they've got a decline in export orders for the first time, I think, in like 2 years. So we can see that the global economy is starting to slow. And the question is, well, how, are people prepared for the next ratcheting down? And I think that's going to encourage a lot of safe haven buying, which would mean dollars, okay? And also it means Swiss franc. We'll see the Swiss franc here. Okay, you can see Euro Swissy. All right, last 2 days starting to pull back here, right to that 110 magic number. The daily pivot's up around, it was just below there. So you were starting to pull back on the Swissy. Now, yesterday, the market was apparently expecting that they were going to jawbone the Swiss franc lower again. Apparently, they've done that 3 out of 4 Wednesdays in August. All right, and they failed to do so yesterday. The market said, okay, well maybe you're not that committed to a weak franc. Let's do some buying of the Swiss franc here, and then you can see how the risk aversion sort of carried over. So let's see here. Question for Philip. So if this is range trading, do I use a stop and reverse position in case there is a sudden trend breakout? Hard to say, because you really have to keep an eye on the ranges. And it's the kind of thing where a lot of times you get false breakouts when you trade these ranges. Let's just go back to Euro here real quick. All right, so you can see that, we've sort of held this range in mind here, 146, 140, just under 147 back from May. All right, and then we were as high as 145.80. All right, so the idea is that, I don't necessarily want to buy the breakouts on the longer term charts here. All right, I prefer to actually see a reversal and a bounce near the bottom to get into the trades. And the reason being is this, is that, you can sometimes catch these momentum trades as they break out, right? But for longer term, I want to wait for, if the breakout occurs, chances are we're going to get a pullback, all right? I want to try and get in with as low a risk as possible. It's kind of like, if you're just sitting there trying to buy highs, well, eventually you're going to get that pullback. And it's like, people who were shorting Euro Swissy here down at close to the figure, at 101. Well, guess what? That was a really nice trend lower, but you can see, bam, that snapped back right in your face. And now, even though, the euro probably will go down against the Swiss franc further, you have to think about it from a risk to reward perspective. So, generally speaking, especially on longer term trades, I like to buy ahead of support, which means I'm trying to buy low. And I'm trying to sell ahead of resistance, which means I'm trying to sell high. So typically I wouldn't hit that reversal, okay, unless I'm just looking to do that on a shorter term time frame for a momentum trade. And by doing that, I probably wouldn't be on the daily chart. All right, I'd be looking at maybe something like the 15-minute chart for euro. So, you can see on the 15-minute chart when you get these little breakouts of the range, and right there, that breakdown is a pretty nice one that occurred earlier in the day. So that's kind of what I'm looking at. You can see this one also happening right down here as well. Okay? Let's see here. So what else are we looking at? So we talked about pound, we talked about euro, we've got the declining global economy. Does anybody have any questions about anything that's been going on, whether it's in the world or whether it's with sort of politics or economics or anything like that? Always open to discuss random things that are happening to us because everything's sort of tied together and everything's affected in the same way. I'm just going to go back and look at this euro scalp deal and say, man, that would have been a great fade out of the top of the band there. Well, we've got it now coming down to the bottom. Perhaps there's going to be a buy-in here somewhere, but I want to wait for those candles to set themselves up with the hike and ashy. So maybe let's just keep an eye on this for a little while and wait and see exactly what's going to happen here. What else? So we've got, I'm going to leave this going for a little bit here. Let's see. I did say buy ahead of support and sell ahead of resistance, but by how much? Well, that's always a good question. It's the kind of thing where, you're never going to be able to pick the exact bottom, nor are you ever going to be able to pick the exact top. in my 12-year trading career, I think it's happened to me like once or twice. And, that's good for a high five moment, but that's really about it. What you want to do is, and what I often do, is I have what I call accumulation or distribution zones. And by that I mean, it's an area with which I'm willing to buy something. So normally when I go into a trade, I'm not just firing in my max position and sitting back and waiting, but I'm going to probably do some scaling into the position. Meaning that if I come up and I say, all right, I want to buy, let's just say I want to buy euro here at 142 and my stop's at, 142.44 and my stop's down at 142 and I'm expecting, I don't know, that's what, 40 pips. I'm expecting 80 pips to the upside, so a bounce back up to say 143.25. All right, I'm going to be willing to buy as it moves against me. So even if it comes down a little bit, as long as that 142 stop is still being honored, okay, I'm going to be willing to pick up a little bit more. My average price is going to go down a little bit as that happens, but again, it's not a willy-nilly just doubling down on a loose position. All right, but the idea is that as long as your stop hasn't been triggered and you're still in the trade, then it is a valid position. All right, and if you can get price improvement during that time, then by all means go for it. And that's the kind of thing, is that you just don't want to go firing into a trade with your max position. All right, unless you're going to be doing some sort of scalping like on this chart, and you say, all right, that's it, all or nothing. But at the end of the day, I don't recommend anybody doing that, because all of a sudden the max position, well, you could take a little bit more, you take a little bit more, and now, you're up to a point where, your account's in jeopardy because you're over leveraged. All right, you're trading with big size, and, you're probably getting into more of a position because, you're not certain that your trade's going to work and it's moving against you. And that could be adding to a loser at that point. So why Heikin-Ashi on the 1 minute deal? Well, it's really, I don't want to say it's as simple as red light, green light here, but it kind of is when you look at it. And when you're taking a number of scalps, it's just a very easy way to identify what's happening. We know about candlestick patterns, and I love to use candlestick patterns on longer term charts as well as some of the short term charts, the 5 minute, the 15 minute. And then, multi-candle patterns for, say, the daily charts, the 4 hour, even the 2 hour. But for, scalping like this, quick, it's hard to read these patterns. And to be honest with you, the patterns with candlesticks don't hold up that well. When you're talking about, looking at this in a 1 minute time frame. I mean, this looks like a pretty, significant move in here. All right. You can see that. And if you look at the candlesticks, let me pull this up on a 1 minute here. All right, the candlesticks, they don't look that bad. This is a 1 minute chart of the candlesticks. But if you see right here, okay, this one move right here, and then this candle here may not necessarily have been the ideal reversal candle that you're looking for. If you're looking for reversal candles, typically you're looking for things like hammers, all right, or hanging men, or shooting stars, or even dojis. So, the Heikin-Ashi just suits up better for me because it's as easy as red light, green light, and essentially what I'm looking for is, the candle that looks somewhat similar to a doji. Okay? So that's why I use Heikin-Ashi in this. But, you can play around with it if it's something you like to do. It's the kind of thing where, whoops, looks like somebody's calling me here on Skype, and I have no idea who that is. Apologies for that, folks. So anyway, that's why I use the Heikin-Ashi on Euro USD. And also, when you're scalping, you want to think about pairs that have, fairly tight spreads as well, because you don't want to give up a lot of that range, the spread with these trades. So that's kind of why we look at that. But man, that was a nice move there in Euro to the downside. All right, so let's take a look around. What else is happening? We haven't talked about the yen yet. I don't know if anybody has interest in the yen. As you can see here, sort of been trading right around these pivots. This is R2. Here's R1, and it looks like perhaps we're going to get a little bit dollar strength. Now, we know about the change of premier over in Japan. They've taken the finance minister and they've promoted him. I guess they think that he's been doing such a good job over there that he deserves the top job. But we're going to have to see what happens with Japan as well and what they're going to do. I mean, I noticed earlier on the last webinar that people were talking about the currency race to the bottom. And, that's always going to be the case, especially, as people try and get those exports moving. But, some people have to be realistic and say, you know what, we're not an exporting nation, we're a consuming nation. And unfortunately for the U.S., that's what it is. So we can move the currency lower as long as we want. We don't make anything anymore here. We don't send anything out anymore, and we're always going to have a declining net exports number, which is a component of GDP, and especially if China maintains their currency pegged to us. So it's sort of like a black hole. So Bernanke can print more money. Okay, they can try and debase the currency all they want, but essentially that money just goes out the door and right to China. It's really been pretty fruitless, and I think that's why we've seen that the dual mandate for the Fed is A, probably outdated, and B, ineffective. All right, and then the other thing is that they're pushing on a string at this point. They haven't moved the needle on unemployment. In fact, it's getting worse. Think about all the people dropping out of the labor force. All right, now all we have is all this just money awash floating around, but the banks keep holding on to it. So, I understand what they're trying to do. They don't want to come out and say that, hey, we need some help on the fiscal policy side of the ledger, but that's really what we're looking at. So we're going to get President Obama next week. He's going to come out with his big jobs plan, the one that was ready to go, I guess, a week or two ago, but he had to hit his vacation. Everybody deserves a vacation, I guess, but you may have wanted to drop the plan before you left, so maybe there was a ray of hope. I don't know. Unless, of course, you didn't have a plan to begin with, but that's neither here nor there. So anyway, that's kind of what we're looking at. We talked about dollar and we talked about what's going on with JPY. So same thing with, JPY, Swissy, dollar. Those are safe haven currencies. And, when the risk picks up in the market, that's kind of what we're looking at. So let's see here. That's Singapore. I'm not looking at that. I want to look at S&P here. See, see that spike higher and just the pullback a little bit. But I'm a little bit surprised that the S&P is pulling back a little bit. I guess maybe it's just a little bit overextended, but I think we should see that was a decent number, I guess. But you have the market sort of playing around with the notion that QE3 is forthcoming. And one of the problems you have is that, all of a sudden it's like if you're rooting for QE3 because you want to see some inflationary pump to either stocks or commodities and gold, all right, then you don't want to see good economic numbers. You want to see bad economic numbers because that's going to encourage the Fed to step into the arena that much quicker. All right. However, if you do start getting good economic numbers, now people are going to say, hey, wait a second, maybe we're not getting free money this time around. Maybe this isn't the best place to be investing in stocks or commodities. And then that causes a little bit of pause and trepidation. All right. We can see that gold is actually a little bit lower right now. We can take a quick peek at that as well. So, it's just amazing the way that all these things are intertwined and, how these decisions. But gold, okay, 5-minute chart, but if we look at it here, boom, a little bit of a range here. It looks like 30-minute chart. Maybe we're setting up for what may be considered, say, a bull pennant here. If we get the breakout to the upside again. All right, we can go back a little bit and take a look at this. A 4-hour chart, yeah, it's a tough one, but you can see that we're sitting up there, and if we get the non-farm payrolls tomorrow, and people think, hey, QE3 is coming, we could see gold bounce again. So, let's talk about non-farm payrolls tomorrow for a second. Now, we've had the employment report starting this week. We had ADP yesterday, which came in a little bit lighter than expected. All right, I think people have been trying to put a little bit of a correlation between ADP and NFP. Non-farm payrolls, and there really isn't one that exists. So sometimes the numbers kind of tend to match up, and everybody says, oh, man, that was a prognosticator of NFP, but other times it's completely disconnected. So, don't put too much weight in the ADP as far as how it's going to affect non-farm payrolls. All right, and then this morning we got the usual 408,000 newly unemployed here in the U.S. as well. So tomorrow we're looking at, I believe, 75,000 jobs added is the number they're calling for. And that's significantly lower than what happened last month. All right, I think we were up around 117 or something like that. And, the market had been calling for the lower number then. So, kind of like how, this ISM manufacturing earlier been setting the bar very low. All all right, it's easy to kind of jump these hurdles. So it's going to be interesting to see how the market reacts, because a better than expected number could mean, hey, maybe there's a pause in QE3 and that the Fed's programs are working. Of course, we'll have to see how much it beats it by. All right, if it comes in a little bit less, all right, we might get an immediate reaction that sells off, and then all of a sudden everyone says, hey, wait a second, this was good actually because QE3 is coming, so let's start buying again. So, we know about the volatility that occurs around NFP, but it'll be interesting to see exactly how it plays out tomorrow based on what the number comes in at. So, do we have any questions about anything that's been going on, or anything you want to look at? We can look at any of these pairs here. If anybody sees anything setting up on the charts. All right, let's set the 4-hour. Let's go back to a little bit of a faster charts here. Okay, you can see dollar sold off against loonie right away, and now it looks like dollar may be strengthening again. We had Canadian GDP figures the other day. They came in lower. All right, you can just see how tied to the U.S. economy Canada is. All right, and that's also Canada is the U.S. As a commodity currency, like Australia and New Zealand are to China. We talk about the Chinese slowdown. Their PMI is low, a little bit better than last time, but still low. But export orders have dropped. All right, you can see the Aussie still managed to eke out some gains, but that was based on better than expected retail sales figures that happened there, 0.5% versus 0.3%. All right, but if we look at the Kiwi, you can see that the Kiwi, similar movement, but it was down a little bit lower. So why is oil pushing up at the same time that dollar is strengthening? That's a good question. Let's take a look here. I believe, what's today, Thursday? Are there oil inventory numbers today, or was that yesterday? Let's check this calendar here. Give me 1 second. No, the oil numbers were yesterday, I guess. That's a very good question. It looks like oil is moving, I'm guessing, with the S&P here higher. And that also could be a divergence. Oh, they were yesterday, right. So this could be a little bit of a divergence happening here. Let's look at Euro USD. Okay, Euro's still going down. Perhaps we're going to get a little bit of a pop here in the Euro, moving to the upside. You can see stochastics are at the oversold level. All right, we've got a low here of about 142.28. Call it 142.25. All right, let's check the 1 minute. All right, you can see here that it wasn't a great Heikin-Ashi candle change that would have gotten us into this one, despite the color change. So perhaps we're not done here, but maybe going to wait for a little bit of a pullback on Euro, see if there's a little bit more selling, and then perhaps there's going to be a buy in here. Let's see, Boyke saying Libya. Well, I'm not certain what's going on with Libya today, and I'm also not certain if people are watching Brent or if they're watching West Texas. There has been some divergence between the price of the two. All right, we know that the Libya deal affects Brent, but West Texas is kind of what we're looking at more during the U.S. session. So, the Libya thing's a little bit odd in that, okay, now that the bad guy Gaddafi's gone, maybe more oil is going to come back online, but then again, we don't know exactly what the heck's happening over there in Libya and who's going to be in charge and running the show, and maybe the oil's not coming back online. Who knows? So, is this going to be a market-friendly regime that takes over there, or is it going to be somebody who's not as friendly as people might think? So, interesting with oil. Would I trade a half-a-minute chart if available? No, actually I wouldn't. But you know what I do trade off of with my automated systems? I actually trade off of tick charts, which is interesting. So that's a tick-by-tick running. I'm more interested in price action than actually, the time component of it. One of the things that is nice about forex trading, or I don't know if you want to call it nice, but one of the reasons why forex trading set up so well for my style of trading was that, when I was a stock trader and when I was a futures trader, I tended to use point and figure charts a lot because I was very interested in price action. And, one of the things about just looking at those type of charts is that you never get volume readings. so you don't get to see those volume spikes, which could potentially move the market, things like that. And, you really don't get the good volume readings in Forex either. So it's almost like, you're just taking out one of the three major components of what makes prices move, whether it's, just price action, time, or volume. So by getting rid of the volume component, you're able to focus on what's happening. So Blakey was joking about the half-minute chart. Well, I don't joke about these things, Blakey, I got to tell you, because tick charts, they can be very effective if used properly. Of course, as I mentioned, it's all automated stuff running off of that. So I don't think that I've got the skill, the eye, the patience, the ability, or the endurance to be able to keep up with tick charts at this stage of the game. Well, I see this lady on television is hanging out down at the CME. Oh, natural gas storage numbers. All right, well, that's doesn't have much going on there, but we're keeping an eye on the euro here. Let me see. Am I happy scalping? Well, it depends. I'm happy making money, Boyke, is what I'm really happy about. Whether I have to scalp, whether I have to sit in positions, whether I can day trade, whatever the case may be, if I'm making money, I'm happy. But part of what, you have to consider is what's going on in the marketplace. And, what type of market are you in? I mean, it's great when you can get into a trade off, say, the 5-minute or the 15-minute chart, because you've got some trending action and, you can just ride that puppy for a while. But, we've been pretty sideways in a lot of these markets. So, the scalp is actually held up pretty well of late. Now, would I want to be scalping within a trend? No, of course not. I'd much rather just be in that trend, sit there, hang out, let the market do the work. But, it's the kind of thing where I think, too many traders get involved with one type of trading only. And then, if the market's not setting up that way, then they don't know what to do, or they just experience losses. And, I see that a lot with people who, like to, quote, trade with the trend. It's kind of like, someone says, oh, you got to trade with the trend. The trend is your friend. And, the daily trend is down, so I'm only looking to sell this thing. Or the trend is up, so I'm only looking to buy this thing. And, you have to realize that it isn't always the best course of action, depending upon the style of trading you're in, the risk tolerance, and when you actually trade. When it comes back to the idea that, we can look at a downtrend in a lot of these different pairs, say, but it could be the kind of thing where, maybe all of that down movement occurs in the overnight session from Asia to Europe if you're in the U.S., and then all of a sudden, by the time you wake up, all the moves been made, and all of a sudden, now it's the retracement, the short cover and the buyback that you see during your session, even though the trend is down. All right, so what do? Well, if you're a short-term trader, you can buy that, ride the bounce, and then maybe reshort now that you've got some gains in the hopper, or maybe it gets back up to that resistance, or you can be patient. You can wait for it to pull back and hit that resistance. Okay, but a lot of times people just say, well, it's going down, so I better sell it. And they don't consider exactly where it is in terms of price action with regard to support and resistance. So, those are some things to definitely consider. All right, so Euro's still selling off, and doesn't look like we're making a comeback here anytime soon. What do we have left here? About 12 minutes. Gosh, that's some nice movement there. Let's see what pound dollar's doing. Wow. That was another nice one there. Could have sold that breakdown right after that, right at the range breakdown. Another pretty one. And let's look back to oil. Oil seems to be pulling back. Is S&P pulling back? There we go. There's the S&P pullback. All right, you can see here you got a candle hanging out, closed actually outside. The entire body's outside of the Bollinger Band. Times when I see that typically say, all right, that's a decent shorting opportunity. So just something to consider. But it looks like now, you see the selling, and a lot of times, you got to consider these correlations. And like the question that was asked about, the oil, why is oil going up? Well, that's you basically nailed it right there. You said, well, gee, oil shouldn't be going up, so maybe this is the time I should be thinking about getting short. And as you can see, that looks like it may be the right position to be in at this point. So, all considerations to make, and all things to think about. So, we have any questions about anything else? I just got on this Twitter machine the other day. That's kind of exciting. At the end of the presentation, I'll let you know about that if you guys want to come follow me. But I'm going to be doing trade alerts, things like that, and just general items of interest. If anybody finds me remotely interesting, you can certainly hop on there. Yeah, other than that, let's see, just got through the big hurricane here in the East Coast. I'm based in New York City. Was lucky to avoid the carnage, and you can see there's still a lot of mess going on. And much like these natural disasters you see elsewhere, whether it's Japan or earthquake in New Zealand, the initial economic fallout's gonna be sort of tough, but the rebuilding efforts are going to add to hopefully jobs and economic output as that takes place. So, turning a negative into a positive is one way to look at this. Of course, we have to make sure that somehow this gets through the passes political muster, and that we're actually going to have rebuilding and not just a bunch of people squabbling over cost and where the money's coming from, or how to balance, or whatever the case may be. So it'll be interesting. So there goes oil. And, you can see that happening. Let's see. Do I trade alone? I'm not sure what you mean there, Boyke. As far as what goes. Do I trade, am I the only person in the room? Am I the only person making the decision? I have both a home and an office. And depending upon which session it is, that depends where I'm trading from. So sometimes when it's overnight and earlier in the morning, I'm trading from home. And what I'll sometimes do is if I get a good position going, just pop in a stop, head over to the office. It's one of the things about living nice things about living in New York City is that you're never too far from the office. Stay a quick subway ride away. So that's one of the things. Let's see. Home or office or firm. I actually have my own firm, Boyke, which is what we call a CTA here in the U.S., Commodity Trading Advisory, based on forex trading. So, is EDU only me? No, there are other employees of FX EDU. So enough about me. Let's get back to the markets here. And what's Euro doing? All right, so maybe we're setting in here a little bit of a bottom. And, no, not quite yet. Let's take a look at the scalp action. Let me move this up so you can see it. All right, that's actually a much nicer doji. All right, and we can say that 142.25 area was, I guess, a little bit of support there. Perhaps there's a little bit of a scalp in there for those inclined to take it. But when you look at it on the 5-minute chart, well, it's setting up to be a little bit of a hammer. I'd prefer to see this thing up a little bit higher towards the top there, but that could end up being a decent reversal for those inclined to take it. So, dollar up, oil up is the question. What's interesting is, we're trading such a range here that it's almost like I feel like the bots have sort of gotten behind the whole deal. When you have oil, okay, you can see gold selling off, dollar moving up, all right, but stocks, hanging in there. And one of the things to consider is that, for a while this correlation has been, stocks up, dollar down, stocks up. Well, if you think about what's been going on in the marketplace and how we have, sort of this risk going on around the globe, I've sort of been kind of toying with this idea for a little while and been talking to people about it, but I would not be surprised to see a scenario where both stocks go up and the dollar goes up. And, the initial breakdown of that correlation is, potentially going to happen. And it's going to be, a little bit messy if it does. But what it means essentially is that if you think about it, where are you going to invest your money today, right? If you had a big chunk of money, you got a retirement account or whatever it is, where do you put your money for the long term? All right, you can stick it into bonds, which, U.S. Treasuries are paying nothing. All right, you're actually losing money there, but you might say, well, I just want the safety. I'm not looking for growth. All right, you could put it into dividend-paying stocks. Some of these big global conglomerates that pay nice dividends, and you get a nice yield on them. That actually looks like a pretty decent idea. All right, you may be seeing that growth abroad in some of the emerging markets countries starting to slow. All right, so you might be thinking that, you don't want to put your money there. So I think a lot of people might consider stocks still as a decent alternative. I mean, U.S. corporate balance sheets have never looked better. And sure, we've got a declining economy. These earnings aren't going to grow so much. But if you've got a nice, decent dividend coming in, perhaps, individual companies can start to emerge, and it's no longer part of this just buy the entire market or sell the entire market, rising tide lifts all ships or throw the baby out with the bathwater. But, you actually get back to a point where, equity analysts are relevant again, where somebody can actually come out and say, hey, this company looks pretty good. They've got a good product. It doesn't matter what the market's going to do. So, let's see, under the pillow and under the bed. Yeah, that's a place some people might put it, but would you want to put it, what currency would you choose to put it in? You might put it under the pillow as it's worth one thing. You pull it out and it's worth a heck of a lot less. Maybe you want to sleep on gold bars. That might be an idea. Could be uncomfortable for you, but maybe that's the place you want to be. So, you have to think about, what is the best investing alternative. And a lot of times, it's like you sort of have to hold your nose and buy, so to speak. And I think that's what we're going to see with stocks. So, it's not insane to say that stocks can go up in a rising dollar environment. It's happened before in the past. Okay? It's just a question of where's the risk coming from. I mean, let's say the risk is coming from the euro, right? Let's say that there's a problem. Let's say that Germany can't ratify this EFSF deal. Let's say that the whole Greek debacle is done and Greece gets booted from the euro. All right. Well, that's going to cause euro to go down. All right. That'll cause dollar to strengthen, and potentially, stocks are going to sell off initially and all these other things. But really, does Greece being kicked out of the eurozone affect Apple's ability to sell iPods to China? Well, no, it doesn't at all. Well, unless you think Greece is this huge consumer nation, which we know it's not. So, you got to really think about it from a global macro perspective. So, see, Boyke's saying real estate, and Philip's saying gold teeth. Well, you don't see a lot of gold teeth out there anymore. I think cash for gold has gotten the majority of that. And, real estate, interesting story, but I think you got to be a cash buyer in real estate, because if we do start to see declining, if we start to see inflation picking up, then, a couple things are going to happen. One, you might see rates move higher, although the Fed said they're not going to do anything about it, but you could see values continue to decline. I mean, what happens if they don't get this housing mess figured out and all of a sudden you start to see massive foreclosures start to happen again? I'm not necessarily sure that real estate's a great place either. All right, so we're sort of coming near the end. Let's see, give it to Wayne at boot camp. Oh, geez, I guess this is some sort of inside joke, but let's see here. What else? So euro still sitting in there for the short-term punters. This it looks like it's starting to flatten out a little bit, so I don't necessarily know that we've got anything exciting happening there. Euro Swissy or dollar Swissy. We're back on the 1 minute. Let me go back to Euro USD. All right, so does anybody have anything else they want to look at? Any other currency pairs? Anything you want to get my take on? I've been told I've got a very interesting perspective on things and quite the eccentric worldview. So you never know what might come out of my mouth. The Kiwi. Somebody wants to look at the Kiwi. All right, let's take a look at the Kiwi. Oh, Kiwi, and we're just getting close to wrap-up time. Oh, back to this pound CAD. Looks like Kiwi on the 5-minute chart bouncing a little bit. You can see that we've really sort of been in this range, kind of near the top here. We go back and look, and you can see that we've sort of, we're coming back up to these levels that we had seen earlier. But right now, let's just go to the daily chart. It's easier to see, And right now, it looks like, man, we're like about smack dab in the middle of that. And I'm on a quick Fibbo here. If anybody wants to see that. Okay. And you can see, boom, we're right up around that, sitting right on the 61.8 there, level of retracement from that down move. So we've gotten just above there. If we can maybe hold above there, perhaps we'll get the move higher. But that's Kiwi. What's the next carry trade? Well, the carry trade I saw over the last couple of weeks is guys being carried out of the exchange floor. They're having heart attacks from all the volatility. Carry trade, man, tough call. I mean, if you can stomach it and you can see some of these emerging markets, you know, I mean, think about, you know, the interest you get in, say, South Africa, or, you know, if you're looking at the Rand, say, or, you know, if you can get your hands on some BRL in Brazil, you know, yeah, they're lower in interest rates, but I think it's still up around 12%, you know. You just got to deal with the volatility of price movement. And, you know, if you think about it, with carry trade, you can sort of equate that as sort of packing in your stop. The interest you receive can be used to offset declines. You know, just a food for thought there. So anyway, that's all I got time for today, gang. I got to get moving, but it's Mike Conlon from FXEDU. Oh, and I mentioned I'm on the new Twitter deal for those of you who are out there and are like to tweeting and all these things. It's FX Mentor Mike is my call sign. You can hop on there and hear what I have to say on a minute-by-minute basis. Isn't that great? I'll tell you what I had for lunch and everything. So that's what I got, gang. I'll see you next time. Good trading to all.